Hi, our topic today is control account. If you take a look at this verification of accounting records, we have this topic, okay? So all these topics are trying to verify the accounting records and try to locate any errors, okay, if there is any, okay. We have already done the trial balance, okay, which is to highlight the arithmetic errors in the ledger account, although it will not uncover all the errors. Why? Because even though the trial balance balanced, meaning to say both the debit and credit side totals are the same, but there are still possible that there are errors, okay, occurring even though the trial balance, okay. Which will bring us to the topic correction of errors, but these two we'll go through at a later stage. Today our focus is on the control account, okay. So what is a control account? A control account checks the accuracy of the personal account of credit customer, or we call debtors, and sometimes we use the term trade receivables, okay. So I'll use either debtors or trade receivables, but you should know that they mean the same thing, okay. They refers to the same thing, meaning the credit customers, okay. And credit supplier or creditors. Creditors referring to the trade payables, okay. So if you see trade payables, that means creditors, okay. In the sales and the purchase ledger. So sales, credit customer will be in the sales ledger, and credit supplier is in the purchase ledger, okay. Now this one, control account, is another technique for locating errors, okay. Now subdivision of the ledger. The ledger can be subdivided into the general ledger, sales ledger, and the purchase ledger. Why is that so? Okay, now if you just think of it, okay, business day in day out, they have so many transactions, and then they can have so many accounts, okay. That's why the ledger will become too much, okay. So they divided it into three categories, okay. So we can have the general ledger, the sales ledger, and the purchase ledger. So what will be recorded in the general ledger are the you can see that this is the accounting equation here: asset, liability, and owner equity account, as well as the income and expenses account, except for the trade receivables and trade payables account, because these two will be recorded here, okay. The sales ledger will record all the trade receivables account, whereas the purchase ledger will record all the trade payables account only, okay. Now I know some of you you tend to think that sales ledger is about the sales account, but no, okay. Take note that the sales ledger is only about the trade receivables account, meaning to say the debtor or or you sell to the customer on credit. So these people are your debtors, okay. And purchase ledger is not consisting of the purchase account, okay. Although we tend to think of it, okay, but the sales and the purchase account will be in the general ledger, okay. The purchase ledger will write all the trade payables account, okay. Trade payables meaning the supplier who sell to you the goods on credit, okay. So they are your creditor. So what is a control account? Is a summary of all the individuals' account in the subsidiary ledger, okay. So these two, sales ledger and purchase ledger, we refer them to as the subsidiary ledger, okay. So a control account will summarize the trade receivable and will summarize the purchase ledger, the trade payables, okay. It contains all the trade receivable and all the trade payables in the ledger account, but it will be in totals, okay. It will summarize, because for example the trade receivable, we can have 10 trade receivable, 100, 100,000, okay. So many credit customer, okay. So so this one, we will have a control account which will record only the totals of all these many small trade receivables account add up, okay. So the entries in the control account are in totals, okay? Totals, as I already mentioned. And the two types are the sales ledger control account and the purchase ledger control account, okay? Now, sales ledger control account will be recording the total of the trade receivables, whereas the purchase ledger will record the total of the trade payables, okay? Meaning all the trade receivables add up and all the trade payables add up, okay? So now take a look at this, okay? So what's the purpose of the control account? So as you can see over here, general ledger, we can have actually, as you can see here, the debtor and creditor are actually part of the general ledger, but because it gets too much, okay, as you can see over here, together with the rest of the other accounts, sales, cash, rent, and so on, as you can see over here, there will be, as the business go along, there will be too many entries, okay, of the debtors and the creditors, okay. It can for some business maybe 10, 20, but it can even get to 1,000 or hundreds of debtors and creditors, okay. Then it will become too much, okay, for the general ledger, okay. It will be too much. That's why they transfer out the debtors and the creditor account into what we call the subsidiary ledger. The subsidiary ledger is made up of the sales ledger and the purchase ledger, okay. So the sales ledger will contain the debtor account, and the purchase ledger will contain the creditors account. All the debtors will be here, okay. Now, after this, as you can see over here, as the general ledger already moved out all the debtors and creditors to the subsidiary ledgers, right? So we will have the control account, which will replace the individual account and the creditor account into the general ledger. So this control account acts something like a link between these two, okay. But this one, because you see this is already going out, right? So now they replace this by putting all this into the general ledger, but this one, the debtors and creditor control, will be in the total, okay. So it's actually the same, but this will be in the total, okay. Now, general ledger contains all the accounts except for the trade receivable and trade payables, okay. Actually, this is repetitive, okay, but just so you can really understand it, okay. And then we have also the subsidiary ledger, the sales ledger, and the purchase ledger. Sales ledger contains the trade receivable, purchase ledger contains the trade payable. So all these, we will come up with the control account for the sales ledger. So we will have the total of the sales receivable here and put it in the general ledger. And this one, we will come up with the total of the trade payables over here, put it in the control account and put it in under the general ledger, okay. So the control account actually links the subsidiary ledger to the general ledger. Now, the function or the advantage of control account, it provides independent check on the arithmetic accuracy of the entries in the subsidiary ledger, because at the end of the day, if your record is correct, what you have over here and what you have over here will be the same, because this is actually the sum, the total of what is all these debtors add up and what's all these creditors add up, okay. So this provides independent check on the arithmetic accuracy of all these entries. To avoid overcrowding in the general ledger, as you can see over here, to avoid overcrowding, so we move it to the subsidiary ledger, then we can have the total, which is control account, putting at the general ledger to help detect fraudulent activities or maybe errors, okay. Provide some, because this we can check among each other, tally among each other, okay, to see if there's any errors, okay. Provide a summary of the total trade receivable and payables for quick decision making, okay. So this is a quick summary of all these, okay. At a glance, you can see what's the total debtors balance, okay, and all that, what's the total credit sales and all that. To facilitate the preparation of the trial balance and the financial statements more quickly. Okay, otherwise if you have to one by one balance it and then just you do the trial balance, it will be very time consuming.